Hello, good evening, everyone. Welcome to Business Live. Coming up in this bulletin, Ghana's food insecurity hits 38.1% as more households face hunger risks. We have details from the latest report from the Ghana Statistical Service.
National food insecurity prevalence rose from 35.3% to 38.1%. It peaked at 4.1% in 2025 Q2 before declining slightly.
We will be having a discussion on the back of that. Also in this bulletin, players in the maritime industry demand a 3-month period to allow businesses to adjust to the new mandatory local cargo insurance directive set to take off 1st February.
If it's implemented smoothly, we would need to give ourselves some time, which I call notice to the trade, a period of 3 months within which we can enforce, because this comes with sanctions of imprisonment, sanctions of heavy fine.
Plus, aviation sector players bemoan high taxes and charges on air transport fares.
The total international departure charges to $173 for one-way tickets and $243 for return, catapulting Ghana to top 10 most expensive countries globally for passenger charges.
We have details for these and more for you. Please stay. Thanks so much for your company. I am Pius Kojobaka, and looking at our stories. Food insecurity now poses a direct threat to Ghana's development and productivity. That's according to the government statistician, Dr. Alhassan Idrisu. As fresh figures reveal, Ghana's food insecurity rate climbed to 38.1% by the third quarter of 2025, after peaking earlier in the year, highlighting vulnerability nationwide. More in this report.
The latest quarterly insecurity report by the Ghana Statistical Service shows that national food insecurity increased from 35.5% in early 2024 to 38.1% by the third quarter of 2025.
The survey shows that between 2024 Q1 and 2025 Q3, national food insecurity prevalence rose from 35.3% to 38.1%. It peaked at 4.1% in 2025 Q2 before declining slightly to 38.1% in Q3 of 2025. This tells us something very important, that food insecurity in Ghana is volatile, and that it responds quickly to economic conditions, to seasonal patterns, as well as to price movements.
The government statistician says the implications are significant when translated into population numbers.
The number of food insecure persons increased from 11.2 million people in 2024 Q1 to a peak of 13.4 million people in 2025 Q2. By 2025 Q3, the number declined slightly to 12.5 million. That represents a 7.9 percentage point increase from the 2024 Q1 low of 11.2 million people.
Regionally, the Upper West, Northeast, Savannah, and Volta regions continue to record the highest insecurity rates.
So if at the national level, food insecurity prevalence rate is 38.1%, and you have a region like Upper West that records 55.9%, then you know it is high compared to the national average. Or Volta that records 50.1%, or Northeast that records 45.9%. These are very high. Now, if you flip the coin and you look at the region that recorded the lowest food insecurity prevalence rates, then we are talking about the OT region, whose food insecurity rate declined from 23.8% in Q1 to 18.4% in Q3 of 2025.
The Ghana Statistical Service notes that sustained and coordinated policy interventions will be critical to reversing the trend and safeguarding household welfare and long-term economic stability.
All right, so joining us via Zoom to discuss this further is the former Executive Secretary of the Peasant Farmers Association of Ghana, Edward Kariwe. Edward, thank you so much for making time to join us here on Business Live. And we are learning from what the government statistician is saying that food insecurity has risen to 38.1% in Q3 of 2025. Really, what do you think are the main factors driving this increase at the grassroots level? Unmute for me, Edward. Mr. Kariwe, if you can unmute for me, I will be very glad if you can do that for me. Unmute for me, Mr. Kariwe, if you can. We can't hear what you're saying, really.
Hello?
Yes, much clearer now.
The network is...
I was asking you to tell us what you think could be the factors driving this increase at the grassroots level. It seems you're having some technical issues, and we shall rectify that and get back to Edward Kariwe. As and when we do have him, we shall bring him on to speak to us on the subject matter. But let's shift focus to some other stories. The Ghana Chamber of Shipping is calling for a 3-month period to allow businesses to adjust to the mandatory local cargo insurance directive set to take off 1st February. Now, the Chamber made this known at a roundtable stakeholder engagement. We have more for you in this report.
The Ministry of Finance has announced that all commercial cargo imports into Ghana must be insured by the insurance companies licensed in Ghana effective February 1st, 2026. Although the directive has now been formally announced, it is not new. The requirement is already provided for under Section 222 of the Insurance Act 2021, Act 1061, which mandates local insurance for imported cargo. However, the Chief Executive of the Ghana Chamber of Shipping, Dr. Emmanuel Kofi Mbia, is calling for a 3-month transitional period to allow businesses to properly align with the directive and ensure a smooth implementation.
For the Insurance Commission, for Ministry of Finance, for those who want to have this implemented and to have it implemented smoothly, we would need to give ourselves some time, which I call notice to the trade, a period of 3 months within which we can enforce, because this comes with sanctions of imprisonment, sanctions of heavy fine, and this is about business. And because it is about business and you want the ease of doing business to be there for those in the industry, we must allow this period for people to compose themselves, get to appreciate, know that the contracts which they are now going to enter into, they must enter into those contracts for the importation of their goods on cost and freight basis and undertake the insurance with a local insurance company, so that if anything happens to the cargo, whether it is misdelivered, non-delivered, whether there are damages to the cargo, they can make their claim appropriately here in Ghana.
Meanwhile, chartered consultant and lawyer Larry Jage has expressed confidence in Ghana's readiness to implement the policy, stressing that Ghana has the institutional and technical capacity to successfully roll out the cargo insurance directive without disrupting trade.
All training on marine cargo insurance will use the Institute cargo clauses anyway. So there is no issue of capacity or experience about underwriting marine cargo insurance. And let me add that the insurance market has been underwriting marine cargo insurance for decades. It is not as if this is the first time that is going to happen. The only thing the National Insurance Commission, through the Ministry of Finance and the other institutions, are trying to do is to formalize the process. We know there have been issues or concerns raised by some trade bodies, but we want to assure them that this market has the capacity It has experienced personnel to underwrite marine cargo insurance, and also it is even cheaper to buy marine cargo insurance here.
Stakeholders say effective stakeholder engagement and a smooth transition will be crucial to ensuring the Cargo Insurance Directive strengthens the local insurance industry without disrupting trade.
We want to talk more about the marine cargo insurance because the Importers and Exporters Association of Ghana says it is not resisting government's new maritime insurance policy, but warns that rushed implementation without consultation could expose businesses to serious financial and legal risks at the ports. Executive Secretary Samson Asaki Awingobit at an engagement in Tema says they are ready to engage stakeholders to ensure smooth implementation.
The new directive requiring all commercial cargo to be insured locally as at February 1 is broadly supported, especially for its potential to retain value within the Ghanaian economy. However, importers are asking if local insurers are financially ready to handle major marine claims, and can settlements be paid promptly when losses occur at sea or along the supply chain. There are also legal concerns, particularly where cargo arrives without local cover and criminal sanctions apply, and where goods are shipped on credit with insurance interest resting outside Ghana. Executive Secretary of the Importers and Exporters Association of Ghana, Samson Asaki Awingobit, insists government failed to engage them.
Also, you have a problem on the law itself, where it's stated that if once comes with the cargo without the cover from local insurance company, what it means is that you can be fined in a court of competent jurisdiction, or you can be sentenced, you can be jailed. That is, you can go to jail at the same time, or you can be fined and jailed again. So if you look at that's what the law says. If they had met with us, or if Finance Minister had asked NIC to meet with us, we would have asked that if they can go back to Parliament to do something with, because we believe that insurance companies are also doing their business. Just like legitimate business, get like Ghanaian importers are also doing their businesses. I haven't committed any crime. It should be the insurance company themselves to come and convince Ghanaians that, look, Ghanaian business, I mean, by the time people were taking your insurance outside overseas to cover your cargo, now we have the financial muscles. We are prepared. We can pay the same claim quickly and timely as those companies have been doing. Then too, it will go a long way to boost our economy. It will expand the economy. More money will stay in the country here. We will support it. However, be as it may, we are not fighting it. We just said that there should have been need for the Ministry of Finance to engage us.
Meanwhile, Asaki Awingobit, painting a scenario, says the demands of the local insurance could dent the relationship built between the supplier and importers.
The supplier could give you cargo on credit. Now, the terms of the cargo could be, say, okay, from the supplier warehouse to Temaport. When the cargo is leaving the supplier warehouse in Europe, come on to Temaport, the risk is on the insurance interest, or risk is on the supplier, because I have not paid him a dime. Whilst I have not paid him a dime, and he's sending the goods on credit to me, and anything happened at sea or from his warehouse from the airport to Temaport, and anything that happened on the way, who has the insurance interest? It's not me, Asake, who's buying the goods on credit. It is the supplier. So what will happen to that? Or the contract says that, okay, from the supplier warehouses to Temaport, it must get to my warehouse before I can take responsibility. So when they even clear the goods at Temaport and on the way to my warehouses, and there's any accident that occur, God forbid, and the goods got damaged, it is the insurance interest is not on me, it's on the supplier, because the cargo must get to my warehouse. That's why I take responsibility. How are we going to treat this with the law that we are having currently now?
Importers and Exporters Association of Ghana is calling for further engagement to address any bottlenecks with the new directive. Kwame Yankes reports for Joy Business.
Still within the insurance space, country lead and chief executive officer of Salam Alliance Life Insurance Ghana, Teria Ben Ahmed, is asking government to sustain Ghana's current positive economic trajectory, citing its potential to drive growth in the insurance industry. He believes sustained economic growth will boost insurance demand, particularly in health and life insurance. Speaking to Joy Business in an exclusive interview, Mr. Ben Ahmed urged government to maintain macroeconomic stability, improve infrastructure, and promote financial inclusion to support the sector's growth.
from the perspective of Sanlam Alliance, what we have been able to do in 2025, first of all, is to restart our business.
Okay.
So, you go through a merger, you integrate, and then you stabilize. So we stabilize our business in 2025, leveraging on all the positive economic turnaround of this country. Thankfully, by virtue of that massive turnaround, we come into 2026 and say, we are now optimizing. What does optimization mean? We want to go to all the 16 regions of Ghana. In 2026, we're currently at 11. We want to expand to all the 16 regions.
That's ambitious.
That's ambitious because, you see, the economy is enabling. I mean, inflation is now, I think, 3.8% in January from 5.4% in December. Our CD is the best performing currency in the whole of Africa. I mean, government has sustained payment of coupons under the domestic exchange bonds. What else can you ask for in as far as the economy is concerned to drive private business or business generally? And therefore, from where I sit right now as Terry Banamed, I am a happy Ghanaian, and our economy is making it a lot easier for us. Because look, if the economy is enabling, then business can thrive.
Certainly. Then
you can be able to have conversations about financial protection. Because if the basics are challenging to deal with, because inflation is really very high, as we witnessed in some years back, then it enables us as a business to be able to speak to the Ghanaian breadwinner and say, let's have a conversation about the protection of your income. Because it is great that you have achieved what you have achieved, but it's important that you protect your income for the sustainability of the welfare of your family and Ghana as a whole. The economy provides enablement for business to thrive. What we achieved in 2025 is massive. Best performing currency on the African continent. Sustained coupon payments under the DEP. Inflation down. I mean, 13 months sustainable decline to 3.8% in January. Which want to get interest rate down, driving, if you like, some rebound activity in the bonds market.
Fuel prices coming down as well.
I mean, all I will say, or what our expectation will be, will say, if the finance minister or president is hearing me, sustain it for us. I think I am a proud Ghanaian today because of how the economy has transformed. And so sustainability is usually the question that we have to answer anytime, of course, we engage our international partners and tell them that Ghana, this is the real Ghana, you know. And 2025 has proven the capability of the Ghanaian to manage his own affairs and to transform the fortunes of our own country. And it's amazing how we have transformed. But the next conversation, or what I will ask for, is sustainability.
You're still watching Business Life. We have more for you after this break. Hello again, welcome back to Business Life. Some players in the aviation industry have bemoaned high charges and taxes on operations of airlines and airfares. According to them, the high charges hamper demand and restrict competition compared to counterparts in other parts of Africa. Their concerns follow the passage of the Airport Infrastructure Levy Bill by Parliament, which mandates $100 airport infrastructure development charge on airfares for flights outside of Africa and 100 cedis for domestic flights.
The move has drawn sharp criticism from players in the aviation industry. Stakeholders maintain that instead of stimulating growth, the levy risks pricing Ghana out of the regional aviation market at a time when Africa is pushing for cheaper connected skies. Stella Marie Ndonge is chairperson of the Board of Airline Representatives Ghana, and she spoke at the 5th Aviation Ghana breakfast meeting.
We are deeply concerned by the upcoming AIDC charge of $100 on return tickets scheduled for 1st of April 2026, bearing in mind that more than 70% of our traffic is both in and outbound. These new fees will bring the total international departure charges to $173 for one-way tickets and $243 for return, catapulting Ghana to top 10 most expensive countries globally for passenger charges.
Responding to these concerns, Managing Director of the Ghana Airport Company, Yvonne Efriye Opare, argued that the fee is aimed at infrastructure development at the airport.
Everything that comes beautiful comes with a cost. Can we imagine, as the Director General had referred to, that if there was no Terminal 3, And if we were only going to be comfortable in Terminal 2 and we hadn't taken the pains to actually pay for Terminal 3 to come, how would Ghana's aviation have been? So we are at a time where we necessarily have to expand, and expansion comes with cost. But at the end of it all, if we see what the cost has gone and what it has done, what it has gone to and what it has done, we will be happy for it.
Meanwhile, Frank Enin Bonsu, president of the Ghana Association of Travel and Tour Agents, called for broader consultations ahead of major industry reforms.
Some of these taxes, I think before they come up, should engage the practitioners who are in the field, because even the airlines, we have first-hand engagement with the customers before they get to them. And looking at our numbers, we do a lot. So it's now upon us to go and explain what this tax stands for. Madam talks about experience. You can't have experience without the travelers.
The 5th Aviation Ghana Breakfast Meeting is a forum to foster policy direction and market concerns in the country's air transport sector.
The Economic and Market Outlook and Strategic Investment Orientation for 2026, published by the Minerals Income Investment Fund, is forecasting improved revenue from gold production for the country this year. There is more in the following report.
Supportive gold price environment during the year should provide partial revenue support, with a near-term outlook shaped by lower throughput and ongoing feasibility work to assess post-handover redevelopment options and potential life of mine extension. In addition, the Aboso gold fields and Daman mine, which are expected to be in the late stages of their transition to government ownership ahead of a full handover, will bring a positive outturn for production. Building on the latest production trend, MIF said gold is expected to further entrench its role as the anchor of Ghana's mining sector, with a total output increasing to approximately 6.3 million ounces in 2026. The growth will be overwhelmingly driven by the small-scale segment, which expands more than fourfold from about 0.7 million ounces in 2022 to over 3.2 million ounces by 2026, raising its share of national production to just about 50%. In contrast, large-scale producers are projected to remain broadly stable, easing from about 3.0 million ounces in 2022 to a trough near 2.8 million ounces in 2025, before recovering to roughly 3.0 million ounces in 2026. This evolving production mix underscores the need for continued formalization, stronger regulatory oversight, and enhanced governance frameworks to support environmental compliance while improving the state's capacity to deepen royalty capture and strengthen sector resilience.
And one authentic online portal you can get business stories is myjoyonline.com/business. There you go on that portal. Ghana's food insecurity hits 38.1% as over 30 million people face hunger risks, according to the Ghana Statistical Service. Also on that portal, high airport infrastructure charges making Ghana's aviation sector uncompetitive, and the stakeholders in that industry are making that allegation. That's it for Business Live. I am Pius Kojo Baka. See you at 8 p.m.